Welcome to the weekly tax update for January 19th, 2024, otherwise known as episode 89. Yours truly, John here. Thank you for taking a few moments out of your busy week to stop by, or at least the busy end of your week. Some upcoming programs. I'm confirmed in Las Vegas for the Nevada Society of Enrolled Agents, May 15th, program to be announced. Latino Tax Fest, June 24th to 27th in Las Vegas. They have moved that date from July. I am speaking still in discussion, but it will be something on artificial intelligence. I can finally announce I will be at CSEA in Arizona. 2 classes on artificial intelligence, use of artificial intelligence in replying to federal tax notices. We've been getting great results in getting the software based on a set of facts and other inputs we give it to bang out something that's pretty respectable for rote filing. So that'll be fabulous to talk about for a bit, show you some live stuff, give you takeaways to take home. And if you need ethics, I'll be doing an updated version of Weird Science, talk about ethics and AI, probably talk about developing a policy for your practice on what you want to have in it, not have in it. We'll give you some handouts there as well. Speaking of AI, if you haven't taken advantage of watching Hector, you should watch the Hector Garcia on-demand program that we have available. He did a fabulous, keep using fabulous, did a great job for us, and it's a very good introductory program to take a watch on. If you're not currently a subscriber, all of this video content, everything we have available on demand is, of course, available for $52 a month if you are a subscriber. We still have seats available in the seasonal tax season support program. We meet 3 nights a week. We meet on Fridays from 3 to 4:30 with just this group. Tuesday nights, we do a second session during tax season only for 2 hours. And on Wednesdays, we do an hour of international with Rita Ryan, where we have only international questions. You get all your questions answered, whether it's issues regarding running the tax practice, working with your tax software if we can help, or other practice management, tax return, tax question matters. We're happy to help. Here's the list of upcoming programs. All of these are on demand for the ones where we have passed the date. The most interesting things coming up are, if you do international work, as a pay-as-you-earn pen to paper seminar with Rita on the 25th. Form 8858 with Rita. Now, there are changed reporting requirements. They issued a new set of instructions in December with very little fanfare. And that's why Rita was doing this program beforehand, but all of a sudden it's now become very important, we think. It's looking more and more like a Form 5471 for these, friggin' sole proprietors working overseas. So we think that's an important program to attend, please. And pay as you earn. I mentioned, and I'm going to do a class on Form 7206 simply because we missed that one and we need somebody to do a class on it. Speaking of webinars, there's 3 upcoming IRS webinars. Foreign tax credit for 2 credits that might be interesting to hear their take on some issues. Again, 2CE. Navigating through the restart of automated collection notices and penalty relief. That might be great. That might not be great, but it's from the IRS. It's free, and you get 1 CE for it. And the IRS is going to talk for an hour on the employee retention credit voluntary disclosure programs with limited dates on withdrawing your claims and filing a voluntary disclosure. So I think this can't hurt either. I put the links to register to these on the resources page. There should be a Word document with all of these links on there for you. The 1099K IRS webinar is now available on demand. I found it to be okay. I thought it would go into a bit more than it did, but it is an interesting take on the 1099K information, so you might want to watch that as well. No CE for on demand from the IRS. Now, I was going to go away. Now that there are pages that you can access in the IRS website easily that tell you the status of what they're doing, where they're doing it, what they're up to in processing, I keep going back to see maybe they're going to add more, maybe they're going to update it, and they really haven't. But So the only update they really had since mid-December is that Business e-file was open. It opened up on the 12th. They started processing returns on the 16th, and I have to tell you, I have returns that have been processed. So that is working. Notice amended returns. They're still working on returns as far back as September. Form 941, I'm only giving you this to tell you that they're not working on ERC returns. They're reminding you of that, right? We're working on any amended 941 but the ERC. Form 1041, they're back in July, which was an update. They were back in June. Now they've updated it to July. And for other forms, I've only highlighted where there was a change or where I think there's an important comment. I think that it's going to sound terrible, but as a department within the Internal Revenue Service, the ITIN unit went from maybe the worst during COVID, the worst affected. That unit's in an old Walmart in Texas where they process the ITINs. Literally, it's a former Walmart, and they all had COVID. They were sick. The place was shut down. We heard horror stories, literally, of shopping carts full of ITIN data. Of applications, because you attach generally the ITIN to a tax return, right? To the application, you have to be filing a tax return. So it just dreadful. And they went from being months and months and months behind to being a few months behind to being current. They're processing the work that comes in now. So good for them. Identity theft was updated from February of 2022 to March of 2022. That is not a typo. They are like 720 days behind processing identity theft claims. It's an embarrassment. It takes the median, in other words, half or more, half or less. The median amount of time to resolve an identity theft issue with the Internal Revenue Service is 360 days. They should be embarrassed. They just should. 2848 processing, they say, is 4 days. I'm not quite seeing 4 days, but they're saying 4 days. Now, I put this letter and notice thing, because they did move on general correspondence and business correspondence. Whatever they're dumping into other correspondence, of course, hasn't moved. But this is also embarrassing. I've replied to a letter or a notice. It's 120 days old at this point. You haven't replied to it. And now you're coming into the busy season. It's terrible. We have stuff that we're watching on transcripts, penalty abatement notices, other issues where maybe the service made a mistake and we're not getting a prompt resolution. So just sharing that with you. And these are all available on the IRS operations page. They have not updated tax return volume, but if you notice, they're basically telling you any return they're sitting on, it's your fault, not ours, right? 600,000 require error correction. The 844,000 amended returns suggests to me that they stopped processing amended returns maybe over the summer. Not a good thing, but that's what they've done. And of course, a large majority of those 941X are in fact ERTC. We're going to talk a bit about ERTC. So I left this up unintentionally, but 480 days to resolve on average an identity theft case. It's outrageous. PTIN renewals. I thought it's important, just one last reminder, you and everybody working for you should have a PTIN. If you missed the deadline, don't worry about it. Go renew the PTIN. You need this thing to operate. It's the most basic requirement. Go get a PTIN. Have your staff get it. We make sure I'm the only one that signs a return here. I get a copy of everybody's PTIN. Why? I want to make sure they have one. Was very quick to renew. Still should be quick for you. I rolled out a search tool this week. So it's not on the website yet. That's coming, but the link is in the resources page if you want. It's also in the Facebook group, but you can go and you can type in a search term and we will find you a class probably on any search term that you want, whether it is the instructor, a keyword, part of the name, part of the course name. So I just plugged in representation and it brought up about 20 or so current programs. We only have the last 2 years 22 and 23 in there. We're going to expand all of it now because it works. But if you look at this, it brings up the list. You can click it, and it will take you to the program in big marker, whether it's on demand or live. So hopefully that's going to help with what you're looking to do. Our friends in Congress are back to bare minimum. They did prevent the government from shutting down. They passed a continuing resolution, which funds the government until early March. So we should get to corporate tax extension deadlines. Senate passed by a huge margin, the Democratic-controlled Senate. The House voted pretty much along party lines. They passed it. The bill is going to fund the important agencies some through March 1st, some through March 8th. So announcement 2024-4 talks about what to do with crypto, and it's 3 pages long. It's probably not worth a class. I think we'll see AJ do this in the mid-season update because it's important. But basically, you'll recall the Infrastructure Act amended Section 6050 and said digital assets are cash. We're changing some of the reporting. So this was supposed to change everything for returns that we're going to file after 2023. In other words, for your 2024 return. Currently, it's not required in determining if there's a cash receipt transaction for doing a Form 8300, but the Treasury Department is going to issue regulations. They don't want you treating it as cash until they issue you the regulations. Don't early adopt it, please. All right. Other big news, the Tax Relief for American Families and Workers Act of 2024. When this first came along, I said, my God, it's like Tax Cut and Job Act. They were up all night and they passed a law. And they didn't pass a law. Ostensibly, though, so this is not yet a law, but it's all over the news. So if your clients start asking you about it, you'll be somewhat informed. You'll be able to say, we had a little bit of research on that. And of course, this is one of the benefits of not issuing you continuing education for this class is that I can talk about prospective legislation, likely legislation. So keep in mind, this is proposed. I ran out of time today. I would have put a red proposed on every screen. So this is backed by Chuck Schumer, the Democratic majority leader in the Senate, which is important that he's behind it, that he wants it. Ron Wyden in the Senate Finance Committee, and Jason Smith, who controls House Ways and Means. These are the guys that control the committees that decide what you're going to spend to create the law, that do the work out. They're in agreement. This is what we want to do. They're giving us a bunch of extenders of stuff that was expiring in 2023. And to their credit, the extensions make sense. They're going to make them go to the end of 2025. So we'll have things through the end of Tax Cut and Job Act. Breaks for children, breaks for bonuses. I told you this, or businesses. I mentioned this all summer. You weren't going to see any kind of tax bill without increased child tax credit from the Democrats, changes to 2 basic things in business, the 463J on interest and the interest limitations and the immediate expensing of R&D costs, right? Getting away from the amortization. And we're getting those things, assuming this passes. But New York Republicans still want a SALT deduction, so we'll see where this goes. For working families, the calculation of the refundable tax credit is going to be modified based on the number of qualifying children. The maximum refundable amount per child is supposed to increase in 23, 24, 25. In 2024 and 2025, it's going to be adjusted for inflation. So here's our first problem today. They're saying that they're going to change the amount for 2023. If this passes, at a minimum, you're going to see refunds delayed. Potentially, you're going to see filing season be delayed beyond the 29th. It's almost like they knew they were going to do this, right, when they set the 29th. They're going to make permanent something that we saw back during COVID. You're going to elect to use your prior year's earned income for calculating the maximum child tax credit if it's higher than the current year's. So we saw that with the earned income credit. So enhanced access, we're going to eliminate the penalty that larger families see. So we're going to make sure the child tax credit phase-in is fairer to folks with multiple children. I didn't go back and look at what a tax return looked like what how the phase-in would differ between 2 children and 4 children, let's say. But I imagine we get to that 3 or more, and that's it. So maybe they're going to build the table out a little further, up to 8 children or something, to allow for more credit to phase in and remain. They're going to create flexibility to use the current year or the prior year in calculating the child tax credit. Now, this has been similar to legislation that they didn't pass in the last 15 years. 6 times they've looked at this, they didn't pass. So we'll see what happens if this is one of the things, the low-hanging fruit items. Well, I don't want this. Well, I don't want this. We're in agreement. Move on, right? But the credit is going to see inflation adjustments. There are a few times in my life where I'm glad I don't own block offices still, right? This is one of them, because can you imagine if the majority of your clients came in and you said, yeah, you can't file yet. Guy down the street, he said he'd take my return. It's all going to be wrong. All right. So the requirement to amortize domestic research expenses is over 5 years is delayed until 2026 after Tax Cut and Job Act. The EBITDA change is going to go into effect now. I really haven't looked at that. The 100% bonus depreciation is supposed to start phasing out, right? It's supposed to be 80% for 2023. So here's problem number 2 that's going to delay returns. If this passes, we're going to see that 100% bonus is going to remain through the end of Tax Cut and Job Act. And Section 179 expenses, they are increasing the amount that is allowed. All right, we talked about this. Oh, Taiwan double tax relief. So, traditionally the U.S. government has had a one China policy. It was an episode of The Good Wife. No, of The Good Wife. So anyway, the issue being that in all things we don't recognize Taiwan, or if we do, we recognize it under whatever we would do for China. So lately we're moving away from that. So in addition to this legislation puts right into the code that you can take a tax credit for tax paid to Taiwan, a couple of other things, but the most important thing they've put in there is they're authorizing Congress to go out and pass a treaty, negotiate and pass a treaty. So they're Congress, but they're authorizing the State Department go out and negotiate a double tax agreement. So very exciting stuff happening with Taiwan. All right. Assistance for disaster impacted communities. I couldn't get as much information here as I wanted. It doesn't appear to be that much new. It looks like some of the things we've seen in the California wildfires and during COVID may work their way into federal presidential declared disaster areas. So they are going to allow, though, personal casualty losses to be deducted in a federal disaster area, even if you don't itemize. That's the big takeaway I saw in this. We have more affordable housing coming. They're going to expand the low-income housing tax credit. Again, none of these are all proposed. They're all part of the American Family Rescue of 2024. Now, interesting. We've had all of this nonsense every year over increasing the 1099 NEC amount. I'm going to follow the 1099K rules. We're going to make it $5,000. We're going to delay it a year. Nobody delays it a year. Lobbyists go whine to the Treasury Secretary, and she waves her wand on Twitter, and we delayed it a year. So now they've done something smart, something not so smart. First, the law screws everybody and says, let's make it $1,000, guys, 600 to 1,000. Stop your whining. All right. And then they're going to index it for inflation. So maybe that was the smartest part of this. Takes it off the table and index it for inflation. Now, not mentioned anywhere here. I go back to that TIGTA study from maybe it's 3 years ago now, where TIGTA, automated underreporter, only works 15% of the identified cases. So you've got all this software, all this computer capacity that could be doing something else, popping out all these CP2000s, or popping all these potential CP2000s, and of all the ones that are out there, 15% get worked. Crazy. How many don't get worked? And then, of course, TIGTA picks apart and says, hey, this guy underreported by $4 million 3 years in a row, and that isn't the case you chose. Things like that. But anyway, so this there's a bunch of ERTC stuff. We're going to talk about that in the next page, and it's on page 8. There's a copy of this 8-page outline in the handout section. Right, this comes from Ways and Means. It's their write-up. So we're going to have stricter enforcement measures to prevent abuse of ERTC. They're changing the penalty. The bunch of things I've seen, some of which were in here. They want to change the penalty. They're going to increase the penalties. They want to have a 6-year statute of limitation. They want to make January 31st the cutoff date for filing for both 21 and 20. So that would end 2020 about 3 months early. It would end 2021 a year early, because generally you have until April 15th to file is considered the statute for the entire prior year's penalty or payroll reports. They would also like, there was another item. It's going to come to me. There's one other significant change I wanted to talk about. All right. Employers that are not compliant with ERTC may face additional penalties, etc. We said, all right. Tax professionals, accountants, and advisors are required to exercise due diligence. They are putting this into the law. So previously, AICPA and OPR had come out and said, look, if you think it's a bogus claim, we don't care that some other mill or accountant did it. You can't rely on their work. Do your own due diligence. And what's happening? You're not amending returns of people that got the credit because you tell them, look, you got to pay it back. I don't want to pay it back. I'm going to keep it. Well, I can't amend your return. That's what we're telling you. I have to tell people if we think the credit was bogus. So we don't want to get penalties on ourselves. Okay. So Danny Werfel was in D.C. speaking to several committees, and he indicated that he wants to. So this is the driver of where January 31st is coming from. He wants to cut off the claims, and he thinks it's going to free up agency personnel to do resources. They're behind on their work. They haven't hired people as quickly as they would like to. So he had a closed-door session with congressmen to talk about cracking down, curbing the costs of ERTC, and tracking down fraudsters. They have 1 million yet to get. And, I just remembered I meant to stick in this thing, and this is what happens when you do it at the last minute. If you're not in the Facebook group, you should go in and look. I have an ERTC exam that we're involved in where not my client, right? They've never heard of these folks. They were a referral. So one of the things is that they had 42 employees in 2020. So the IRS took the number of employees multiplied by $5,000, because in 2020 you could get $5,000 per employee. A $5,000 credit, 50% of the first $10,000 of wages per person. So 42 people times $5,000 is $210,000. And the schedule basically shows, and you claimed and we gave you $372,000 for that year. Therefore, you're overpaid by $165,000. It's a low-hanging fruit audit. In other words, it is mathematically impossible for you to get more than $210,000. Therefore, you need to pay all of this back. So we've been back and forth a bit, and they talked to the preparer, turned out was their accounting firm, and a whole bunch of stuff. And at the end of the day, the accounting firm is like, well, maybe we double dipped. We were being aggressive. And double dipped. They did the thing wrong. So you have to have that conversation too that says, maybe you need to be looking someplace else for advice. Conversely, I said, maybe you need a third party to take a really close look at 2021 because they haven't been paid for the 3 2021 claims yet. And I'm wondering if they even qualify based on some of the things they told us. Werfel is the one who said, let's extend the statute of limitations. Werfel wants to end contingency fees for these type of credits, which I found interesting. And they want to add more penalties on for those acting fraudulently. He thinks that the IRS should have high impact, high visibility efforts such as the taxpayer interface initiatives. They think that's a positive thing that you can do more online. They also think, though, they need to go after scammers and do high-profile prosecutions. He wants to show the American public and Congress that if you give the IRS enough money, they won't screw it up. Good for him. Let's see if he's right. J. Russell George passed away. I mentioned that 2 weeks ago. Longtime director of the Treasury Inspector General for Tax Administration. They have not nominated anyone yet to take over for him. Those are big shoes to fill. He was a Harvard-trained lawyer, and I think they did some excellent work. So, all right, and that's it. I apologize that it is a 30-minute session, but I hope that everyone. Let me see what's in the chat and any questions. I do see some Q&A. Oh, Cheryl, I'm looking for a K1 webinar that shows line by line where the input goes on the 1040. Do we have one? I don't think we do. And this would have been an Amy Wall program to get in probably. And Amy has retired from teaching. But I will make a note that is something you are looking for, because I think pen to paper is one of the better things we can do. There's a lot of places where you can get talked down to for a couple of hours, and we're trying not to do that. And I think I'll probably ask Rita to do it, maybe. If you've been to any of Rita's stuff, or you haven't been to Rita's stuff, stop in for her pay as you earn class. I think it's 50 minutes, but she's doing a fill in the form with screenshots and things. So I think it's going to be super useful. Why don't you see what you think of her and let me know. All right. Anything else in the Q&A? Is the $1,000 increase for last year? No, it's not retroactive. So that's a good question. So the $1,000 increase here would be the $1,000 increase for 1099s will be for 2024, and then after 2024 they'll be indexed for inflation. But yeah, not this year. That's can you imagine? We'd all be amending. They don't want that. They've got a new system up. They don't want that new system messed with either. So, all right, everyone. Enjoy your weekend. If you're someplace where it's cold, stay warm or stay inside. Thanks again.